Are you new to real estate, struggling in real estate, maybe a cash buyer or a wholesaler, and you're looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. If you're seeing this message, that means the algorithm said that you haven't subscribed, liked, or commented, or even shared. So if you would, hit one of those buttons for me. I appreciate it. Let's do an analysis. This week on the show, we are going to take a look at 805 2nd Street West in Harden, Montana, 59034. If you're not familiar with the area, neither am I, but it's just outside of Billings, Montana. So let's take a look at these pictures and see kind of what's going on with this thing. It is a 4 bedroom, 2 bath, just under 2,000 square feet. 2 car garage, detached. Whoa, 350 days on the market. That's that's not good. But let's look through the pictures first before I get ahead of myself and just see. Wow, actually looks pretty. This right here is awesome. And I'm shocked that, and it's even got the side door. I'm shocked that it hasn't sold just because of that. Uh, One thing working with a lot of investors and contractors, a lot of contractors rate their income really far down and can't afford to buy something, but they would love to rent something like this. They make plenty of money, they just don't pay the tax on it, so they can't get the loan for it. It's kind of how that system works. But this kitchen looks great. I love the cabinetry. I can't tell what kind of countertops they are, but they look to be in good shape. Nice little dining space, good natural light. I like this place. Is that a stove over there in the corner? No, is that the TV? No, just the TV. Looks like we got some wood floors, tiled bathrooms, about halfway up. Good tile in the shower, tile in the other shower, basement. So this is a split foyer style. This is great space. Yeah, I think it's a great house. So that's just telling us that the price is way too high. XL garage, which we know. It'd be great if they gave us the dimensions on that. 4.2. Garage upstairs, you'll find bright open living, kitchen, cabinet. Da, 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 da. Yeah, I like this house. All right, let's see what else we got in here. In the area, wow, that is a huge list price range from 75,000 up to 4.25. 42% are renters. Wow, interesting. Now, I don't know what overall size that is. That could be Billings, but it's a good odds if you're a landlord. Currently 18 homes for sale, very low inventory. Average household income 65. Average home value just shy of 250. College grads a little over a quarter. Average age 34. Low crime, low walkable, but wide open spaces. So get that. We'll use a different calculator to break down our numbers, but see what our experts are saying on the value. We got a 297, 251, 302, and a 250. They're saying the average value is 276, 410. And they're listed just shy of 300. Been sitting at that price for quite a while. Let's see what we can, what else we can find. So this is definitely towards the upper tier, as we can see here. Oh, this thing's way high. Way, way high. what is, I'm trying to, the overall Harden is just shy of 200,000. Property taxes, the tax assessment went up, but the property tax went way down. Not sure what caused that, but I like it. Looks like it was for sale June of last year. Took it off after 6 months. More than likely, with that short a time frame, took it off for just the Christmas season and New Year's, and then put it back on. See what else is going on here. So we got a 4.2, 25, almost 2,600 square foot ranch style home. So not overly comparable, but that's only asking 260, still active. 300 ranch, 4 and 2.5, a whole lot more square footage. 4.2. Not showing us anything sold recently. And what I'm trying to figure out right now is what I think a good offer price on this, or ARV, after repair value. If you ever heard the term ARV and you're not sure, it means after repair value. What a home is worth once everything is cleaned up, updated, turnkey, move-in ready. I think we're going to try to run our numbers off of 275 just based on this. I don't find any sale comps, which I don't like to see, but let's see what we can figure out. So we'll say our ARV is 275. Just taking some notes here. All right, I think we have figured out, or learned as much as we can on here. Now we're going to jump over and start to break down the cash analysis on the InvestNest. Got it pulled up here on the InvestNest. Awesome site. It's got every bit of information that all of the big sites have, but it's, I think, less than half the cost. If you like skip tracing, they do include this in the price. I will drop a link and a code below in the show notes that will get you 50% off of your first month and your first week for free. Try it out, come back to this video and say, hey, Chris, I liked it, or I didn't like it, and tell me why. I always like feedback. This might be a non-disclosure state, I'm not sure, but they're saying the value is 297. If it was, this thing would have sold already. So I don't think that is the case. And they're not telling us a rough rent number, but we'll get to that in a second. Details, built in 78. We don't have to worry about lead paint as a landlord because 78 or newer, you don't have to test for lead paint every tenant turnover. 2 bedrooms, 1 bath. All right, let's analyze. Calculate some numbers here. So we're just going to call this the property address. Yes, I want to save. Purchase price. We said we were going to base everything off of that approximate ARV of $275,000. Closing cost, I'm going to kick that up to 4% because we're going to be paying both sides, buyer and seller, to make our offer sound nicer. So we think, oh, excuse me, I got to correct this number. So we think our ARV is going to be 275. So we're going to offer 70% of that. Let me pull up my calculator real quick. Times 70%, that gives us an offer price of 192,500. 192,500. Closing costs the same. Our lender, whether we're using a regular lender or a DSCR lender, debt service coverage ratio lender. I'll break that down again in a minute, but you're basically paying 2 points, one way or the other. They bury it in there on a traditional lender, they bury it with other names. Hard money lender, they're just going to say, or DSCR, these are my points. Improvements, I don't think we need anything in here, so we're going to leave that at 0, 25% down payment. I want a 30-year term on that. And rates, we'll just stick with a solid 7 because that's kind of roughly what they are right now for investors. You might be able to get a little bit better, a little bit worse, just depending on so many different factors that we don't have time for today. All right. InvestNest is not giving us a rent price on this. So the first place I'm going to check is HUD or Section 8. And for a 2-bedroom, they're saying they will pay 1302. The other site that I really love is Rentometer. And there's not enough data in the area to even give us a guesstimate on what this thing is. But here's what their opening page looks like. Literally just punch the address in, hit these buttons, check rents. So really the only number we can really go off of here is what HUD is saying. So we're going to use our rent price at 1302. Have not been able to find anything else, which is always why I say check with a local. Check with a local property manager, a local agent that does rentals, so you know what the buy price should be and also what your rent price should and or could be. Always check with a local. Don't trust a random guy on the internet. So let's plug our rent price in of 1302. And taxes look the same as the InvestNest. Insurance, I like to factor in $125 a month or $1,500 a year. Property manager is going to cost us 10%. Tenants paying for all of these. There is no no HOA. Our reserve fund, or I call it my war chest, that is 5% off the top every month for repairs and maintenance, vacancy loss, and capital expenditures. Capital expenditures, also known as CapEx, are going to be kind of your big ticket stuff, your deferred maintenance, like, hey, I needed a roof 2 years ago, but it's finally time. So I start stocking money away for that. We'll plan on an appreciation rate of 2%. I like to increase rents 2.5% per year. Just really keeps up with inflation, insurance, and taxes. And plan to hold it for 10 years. And we are real estate investors. We don't pay full commissions. All right, let's see if this thing cash flows. You were looking for numbers to see if it worked. I know. If you haven't done so already, hit the like button, hit the subscribe button, share this with somebody who might get some value out of it. Let's see if it cash flows. Ooh, that is ugly. You can lose $250 a month for 60 grand out of your pocket. Goodness, that is horrible. Cap rate at 4.4. Yeah, that's real bad. DSCR, again, debt service coverage ratio. They like to see around a 1.2. Some people might even let you get away with a 1.1, but I don't recommend that at all. So essentially what that is it's based on the loan is based on the production of the property. They're not looking at tax returns, W-2s, anything like that. These are the type of loans that I use. Cash on cash is negative. Somehow you can get a return on your investment of just 4% in those 10 years. We plan on holding this thing. 1% rule does not fly. If you follow that, let's see where all our money's disappearing to. And honestly, the rent price just isn't high enough for the value. And we came in about $100,000 low on our offer price from, no, excuse me, yes, over $100,000 low from what they're asking, and we still would be at a negative. Probably one of the reasons why it's still sitting there. Now, you could, if you're local, you can throw in this 130 back in your pocket and manage it yourself. You don't have to keep a war chest. There's your discrepancy, but then that's still kind of even a break even. So you'd have to figure out how to get a whole lot more rent or get a whole lot lower price before your 15 years before your cash on cash is positive. No, probably around year 11. Ugh, and that's with a 2.5% increase each year. And then to get your original capital back out and actually start making some money, you are in the neighborhood of 4 years, maybe. Somewhere in that 4 year, your equity turns positive. But this is still a horrible deal, horrible investment. I would not do a cash deal on this one. Now, let's jump over and do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link will also be in the show notes. So we're saying our ARV we think is 275. And our purchase price, we're asking the seller to be our bank in a seller finance situation. So we want to get closer to that price. Let's see if, let's try 275, see what the numbers play out. But hey, I'll give you what I think it's worth, but I'm not going to pay you any interest. So we're making principal only payments. Now our PITI, principal, interest, taxes, and insurance. For that, I'm going to figure out bank rate. And that really just means our mortgage payment. Well, I got it here on bank rate, 275. I only like to put down 5%. 30-year term, interest rate 0. Zip code doesn't matter. Our property taxes were 145. Our insurance is 125. None of that stuff there. Looks like they changed this site up a bit. No, I didn't even have to push the button. All right, so our PITI, principal interest, we're not paying interest, but it's factored in. Property tax, homeowners insurance, or also known as hazard insurance, comes out to $996 per month. So let's go plug that in. 996. And our potential rents we said were 1302. Still negative. Goodness gracious. All right, let's keep playing with our numbers here. So if we change our purchase price to 250, still with 0% interest. 250. That knocks it down to 930. Yeah, 930. All right, so at least we are cash flow positive here. And I still don't think it's a good deal. I really don't. Management wise, if you're going to self-manage, making about just shy of $200 a month plus your war chest, okay, that's getting a little better, but still not a good deal. So our cash to the seller would be our down payment, and that is 12.5. Agent's not doing anything. Let's see if we can throw $500 and get them to go away. We are not working with a wholesaler, so we don't have to pay an assignment fee. Closing cost is going to be that same 4% that we used on the cash deal. Renos, we said we're not going to do anything because it's perfect. 2 months of holding is just 2 months of this mortgage payment or PITI, and a good TC or transaction coordinator will cost you about $1,500. So upfront, out of pocket, you are just over $27,000 with a very long return on investment. I mean, yeah, it's not a good deal. I don't like it. There we have it, 805 2nd Street in Harding, Montana. Horrible cash deal. Still kind of a horrible creative deal too. I don't know about you, but I'm taking a pass on that one. I want to hear your thoughts on how to make it work, how to not make it work. If you want to move on, drop them down in the comments below. I certainly appreciate it. That's going to do it here for us this week in the Corner Barn on the weekly deal analysis. I am Chris Thompson, that bearded guy, the creative guy. We'll catch you next week.